What's up, guys? Welcome back to Polarity Digital. I think we could just start by maybe talking about our general feelings about the market.
My own personal view is that it all comes down to how likely you think it is that we're going to have a recession in the next 6 to 9 months in terms of what the outlook is. Because it really seems like that's the main card that bears can play for why you should be bearish right now and expect Bitcoin to go new lows, etc. And if that doesn't materialize, it's hard for me to see a whole lot of reasons to not think that historical patterns are playing out the same way. Again, we're seeing it just in our metrics. We're seeing it with on-chain data. Things just seem to be playing out in a very similar way to they have in the past. And so it really comes down to that. And so my kind of overall outlook is bullish, assuming no recession happens. And that's the tricky part, is that even though there's plenty of people on Twitter or now X who will claim that they know exactly what's going to happen or extremely confident about us having a recession or not, I think reality is a lot less certain about that. So my general outlook on the market is bullish, but then hedged to that subjective probability of recession. And ultimately, I think that's just something that everyone has to determine for themselves, is how likely do you think that actually is? Because different people will tell you different things. There's no hard science to it. Otherwise, people would just know exactly what to expect, and there wouldn't be any speculation about it. But I think that's generally where I stand right now. And so I think alts still probably have more time to be in the doldrums before doing anything too exciting like we've seen in previous cycles, assuming no recession. But on Bitcoin, I'm leaning more bullish unless something like that happens. So Jay, what are your thoughts right now?
Yeah, I think on Twitter, or as you said, X, I saw a big long article yesterday talking about how the US dollar is identical to the Roman currency, the ancient Roman currency, in that it was devaluated, et cetera, until the civilization essentially collapsed. And these kind of things are the sort of events that take place over the course of decades, if not hundreds of years, and aren't the kind of thing that are going to lead to a massive recession in December, for instance.
Right.
Which,
Yeah.
because what they're saying, there may be some degree of truth to it. And some of it is obviously disingenuous, but we've seen a flight when there was global uncertainty about financial markets. What did you see people moving into? And it was the dollar. So this whole idea that the dollar's collapsing and this is imminent, and these are obviously some of the more extreme examples, but it's pretty prevalent, and it's to the point where a lot of people, especially if they're less informed about markets, they don't know necessarily what to believe, and these people sound credible and it sounds compelling, and I think it leads people down the wrong path, or leads them into kind of making emotional decisions. Ultimately, I'm with Mark on this one, in addition to the fact that whenever everyone knows something is coming, and this is something I mentioned on Discord yesterday, when the entire clan knows that something's coming, especially when it comes to financial markets, they typically are wrong. I don't think of myself necessarily as a contrarian, but when you get this situation where just, every talking head on Twitter is telling you that a recession's coming, if you're going to make a bet, it's probably safer to make the bet to the opposite side rather than going with whatever they're saying.
Yeah. And then one thing just to add to that, I had actually looked up to see what kind of public polling had been done on this question, like just asking the American public, like what their fears are. And I think as of August, it was still the vast majority of Americans are saying that they're afraid of recession coming in the next 6 months. It's 67% or something like that was what I had seen. And it's just one of those things where it's not just that it seems like a lot of people interested in financial markets are watching for this. It's also like Americans in general. And I've seen a lot of people on the bearish side say, oh, the consensus is that we won't have a recession now, that this is now the consensus trade, that we're going to have a soft landing, et cetera. And I was just like, tell that to the American people. That's not, right. It doesn't seem to be actually the case. And so I think there's even disagreement about what consensus is right now. And so my own kind of personal take on the whole sentiment narrative is that it does seem like we need to get a place where more bears are capitulating for it to be make more sense for us to have that kind of a crash. Because right now, if so many people are expecting it, then are they really going to have been long and then have anything to sell at that point? What's going to actually cause that big drawdown in price? Who is it who's going to be selling who hasn't already done it? And so certainly there's some that's left, but there's always two sides of a trade. And I doubt that the market will just let everyone be short while it crashes and let everyone, become a millionaire. It's not usually the way it works. So I think I would second what you're saying there on sentiment. It just seems a little bit strange right now, but it could certainly happen in 6 months if everyone suddenly decides that no recession is coming, and then the data makes a very different turn. It's not like we're guaranteed to avoid it because of this. It's just the timing might not be what people expect.
Yeah, and the thing about this is something that I grow increasingly distasteful of, and that's this: things can just like switch like that. Today, Twitter's bearish. We're all talking about the USD again, how it's we're the debt spending, how much we're paying to service our debt as a ratio of GDP, all this. If Bitcoin went up to 35K and the QQQ went up to 400, we'd all be in pandemonium instantly. And things like that just immediately switch based on just what's been happening over the last 2 weeks. And people just buy into it like wholesale. That's another big problem in this space that I found, is just the bipolar nature of just the collective going whichever way the wind is blowing at the moment.
And that's where something I say a lot on Twitter is that's why I like to have a model, because it is agnostic to all those things. It doesn't care what everyone's saying. It doesn't care about the incentives of content. It's just going to say what it thinks. If it's going to say something that most people won't like, too bad. It's going to say it. And that is what it is, which is why I tend to lean on that a lot more heavily than my emotional reaction to things. Because as you said, it's really tempting to get caught up in what's been happening in the last week. But ultimately with crypto, that rarely matters. And it's all that anyone wants to talk about because it's the only thing to talk about. And I think that's the other problem with the current market conditions, is that not a lot's happening. So people just grasp on anything that they can talk about, which tends to be that really short-term kind of movements that ultimately don't really mean a whole lot, probably. So maybe it makes sense for us to then move into some of those things. I don't know, Jay, do you think we should talk maybe a bit about some model data, or where do you want to kick off the...
I think a reasonable place to start would just be the question that someone brought up in the Discord. And this is something Mark and I have talked about multiple times in the past even, but this concept that the UDPI didn't really hit the November 2021 Bitcoin top. So the question is, was there a reason for that? And is this something that we should be concerned about heading into a future cycle? I have some strong opinions about this and want to talk about this chart because I think this is relevant. So if you look at the UDPI short or the medium or long, basically all of those back here in this zone, we're looking at 2021 through the beginning of 2021 over here, all the way through the end of 2021 here. So this is the price up here in orange. We had our top over here at around 64K. So anywhere between 57K or whatever it was up to 64K. This is when the UDPI long was telling you that we got above the 4 level. And then this part of the cycle over here, this is that part of the cycle where we went up to 69K. And at this time, the model didn't get above or into that 4 to 5 zone, which is traditionally that highest risk tier, suggesting that, hey, it's time to basically dump out of the market, right? When you look at basically all of the data that we have surrounding this part of the cycle, there's a couple of things that are important here. When we look at something like active addresses, and active addresses are essentially a quick and dirty way to look at the market and ask yourself, what stage of the cycle are we in? And if you just historically look back at active addresses, you can see that they rise in a bear market as more and more interest accrues over time, right? So when we're in these deep stages of the bear market, they tend to be rather low. You can see the active addresses are down here. We're talking, I don't know how well you can see this, but we're down in like the 600K zone here. And we had just came from a place where we were all the way up here at north of 1 million active addresses. And we're looking at a 20-day moving average here. So over a 20-day stretch, we were over 1 million active addresses. And that plummeted all the way down to 600K, right? Now, there were some spikes here. There were some spikes. But remember, back in that cycle, you didn't have the same kind of money come into this market like you had in this cycle, right? If you look at the total cryptocurrency market cap, and I don't have that data in front of me right here, it paled in comparison to the type of dollars that we had in this cycle. So you had all these new people coming in, and this led to all this money coming in, but it was primarily coming into Bitcoin. So people took their profits from Bitcoin and just got out of the market. Now you had a few altcoins go on nice rallies. I think Quant was one, and Link was a more extended example of that. But by and large, as Bitcoin crashed, all of the altcoins just wiped out, right? Because all of this money was coming from Bitcoin. The majority of this new money that was made was coming out of Bitcoin as people were selling, people were leaving the market, and the price was crashing. Okay. You had that same type of event play out in this cycle, but now you had all this money coming from altcoins. People just made all this money in altcoins because recall in April, we had that April and actually the beginning of May, we had that huge rally of money from being made in the altcoins, and then the crash that happened in April and May. Okay. So you have this expected drop in active addresses we see right here. We went from around 1.2 million all the way down to south of a million. So we got all the way down to around 750K. Then it started to recover. So that recovery right there was a lot of those profits coming from the altcoin market into Bitcoin, but it wasn't a true market breaking rally like we saw back here where all these new people are coming in. These were just the same recycled people that were already in the market. And you can see we're south of a million here. It was well short of anywhere where we were at over here. So this rally was accentuated, and we were able to actually make a new all-time high because all of this profit was coming in from the altcoin market. That was very akin to some of these rallies that we saw, right? Some of these rallies up to 10K or up to 12K or whatever. But these rallies weren't being supported by a huge number of altcoin dollars like this rally was. In terms of price, it did hit a top. And when you consider all of these factors, the UDPI still put the risk category into the 2 to 3 and the 3 to 4 zone, depending on which UDPI you're talking about. Like I mentioned in the Discord, if you put that on a 0 to 100 scale, that's still in the 70 to 80 zone. So that's how I viewed that event. And Mark, I'm sure Mark and I don't confer with each other about things before we talk.
I think those are great points. And yeah, actually what I was going to do is quickly share my screen here real quick, and I can throw up, I was going to put the UDPI up here and just talk through a little bit about what it looks like in different ways to think about what it was doing there. Here we go. Okay. So before I get into that, Howard asked a question, was the second peak over here like a dead cat bounce? And I think that makes sense. It's a large one. It's a double top, which are not unheard of in markets. Double tops will happen. But I think that would be consistent. And Jay, would you also characterize it that way? It was this not a real resumption of the rally, this zombie rally afterwards?
Yeah. So I think at the end of the day, the Fed, none of these things happen in isolation, right? There's a lot of moving parts going on around these type of events. But if you recall back to when did the crash or when did the markets, both the stock market and the crypto market, and remember, the crypto market's not driving the stock market. Stock market doesn't give a shit about the crypto market. The stock market and the crypto market both kind of stalled out in November, and that's because they're both beholden to, oh wait, what? You're raising interest rates? That's not good. So that's what put a halt to all of this. If they didn't do that, if they're like, yeah, free money, let's keep going, maybe very well this rally did continue up to 75K, 80K, 100K even. And then you maybe do see those higher levels. But why you wouldn't want this metric to tell you're at get out of the market right now, because this metric's not sitting here talking to Jerome Powell asking him what he's doing. It's just looking at whatever the data is telling it, and the data is telling it that, hey, this rally could keep going. And if interest rates weren't raised up at the time, maybe it would have kept going. And then you would have gotten the results you'd be expecting out of the market. Remember, we don't, these metrics we have aren't operating with a crystal ball. They're operating based on what they believe about what could happen.
Yeah, exactly. And I think that's a great point. And that's actually what I wanted to start off with talking about here is, first off, just remembering what the UDPI is really getting at. And so we often call it a risk model because that's the easiest nomenclature to use. It just gets the general idea across. But really, with the name, it's what is the relative upside versus downside potential that exists for an asset. And so just as Jay was just saying there, at this point, the way that I interpret what the UDPI long is doing here is that certainly it's not saying this is a low risk. I think I don't agree to say that this kind of missed the top. Like, sure, it didn't get up to 4 to 5, but it certainly wasn't telling you that this was a great buying opportunity throughout this point. In fact, if you're using a weighted DCA strategy based on the UDPI, this would have been a sell zone here throughout both of these tops here. You wouldn't have been accumulating in that zone. And then just as Jay was saying, what it was saying at the time was that it was getting risky, but it was saying there was maybe still some plausible upside that could come. And I think that's the way that I interpreted it. That if the Fed hadn't intervened and let's say more new money had actually flowed back into Bitcoin after it broke its all-time high, maybe some more hype came around, some more money came in, maybe we could have gone higher. And that's really what this model was saying, is that there is room if conditions allow. But then again, as Jay was saying, broader conditions just didn't allow that to happen. We fell off. And one of the things I actually said at the time, I made a video where I talked about this, was I was just looking at previous times when the UDPI had gotten to these levels and what the different possibilities were. And I was basically what I said at that point is that you'll either see the UDPI rip further to the upside and get up to this 4 zone relatively quickly, or you're going to see us crash like we did, for example, here in 2019. I think I used this as the main, one of the counter examples of being up at this top. And one of the reasons that I would say this is that the UDPI doesn't like to spend a lot of time above zero when it comes to crypto, or especially here, Bitcoin. Crypto tends to operate with really rapid upside volatility and then slower, more drawn out downside volatility. And what that's going to show up on a metric like the UDPI is that you're not going to spend a lot of time with these really high risk levels, that there's going to be this really rapid move up, this upside volatility, and then it's going to shoot up at these points that it sees as being the place where that upside is really getting exhausted and downside is quite large. But then it's going to come back down. And then as you get down to the deep into the bear market, eventually it'll come down, generally speaking, to this -4 zone or lower when you get down to the bottom. And so the fact that we saw it getting stuck here for so long and then this rapid drawdown was very concerning and suggesting that it was unlikely that we're just going to be able to go ripping off 200K after that, because that's just not, generally speaking, what is the case, that you can only sustain those kind of levels for so long in crypto before things fall off. And so, yeah, so that's the general way I'd say it. And the final point I wanted to make also, and I was mentioning it to Jay as well, is that Jay also mentioned as well, just to show you what some of the other versions looked like. So this is the medium term, which is also getting relatively high. And then the short term especially got quite high risk here. It got all the way up to over 3 at this point, which is really something that's unprecedented in non-topping out points. And the thing that I also wanted to mention was that the UDPI, I think, did a better job than a lot of other models that were available at the time of identifying this as still being a risky point. And it's not just the Bitcoin model. Something else that we looked at the time was what happens if you just take all the different UDPIs we have for all these other different assets. So altcoins, all the different ones we were looking at. What if you just take the average level and look what that is? And I don't have those data right in front of me to show, but they were actually quite overextended. They were showing an average risk that was up, I think, in the 3 to 4 general kind of level. And basically that was saying that maybe Bitcoin wasn't quite up there, but as a market as a whole, things were really high. And that's the other thing that happened here is a lot of altcoins set new all-time highs through here. There was a lot of high risk elsewhere in the market besides Bitcoin, which then ultimately all collapsed. And so that's where I think it was a little bit of a different top here than it was in some of these, where Bitcoin barely put in a new all-time high, but some altcoins really went crazy, Solana, AVAX, etc., suggesting that a lot of other parts of the market were overheating, and that ultimately then led us to the big crash. So there are different ways of looking at it. And obviously at the time, if you were super bullish, you might have just been able to explain this away and say, we're not at 4 yet, so it's fine. But I think if you just look at the data, if you had a system in place where you were saying that anything above 0 is not a buy, this still would have been telling you that it's not a great time to be entering the market at that point. So those would be some of my kind of initial thoughts about that. And actually, one final thing I do just want to say here is that one of the other things that I think we believe here at Polarity Digital is that no single model should be interpreted on its own. And that's where having these other models, which admittedly the forecast model, I haven't created it yet at this point, but other models that you can look at to say, what are they saying? And are they still bullish right now? Or are they getting bearish? And you can use that to help you decide when you're interpreting a different model, maybe what makes sense of how to interpret it at that point. Yeah, so actually, so I can respond to this question here about gold in a recessionary environment instead of comparing coin to something like the NASDAQ or like you given the correlation. This is a great question. And really the reason why I use that comparison was just from, and it's a bit of a meme at this point, but just to say that the expectation that everyone has right now is that if we get a recession, that Bitcoin will follow the stock market, but with a beta. That's Bitcoin and the rest of crypto will get destroyed and at a multiple of how much the stock market gets destroyed. And I think that's a consensus view. I haven't really seen anyone argue differently on X or elsewhere. That's just the accepted truth. And so I think that's the base case for most people, is that you would compare it to the QQQ. You'd say if the NASDAQ falls by 50%, then Bitcoin's going to fall some order of magnitude more than that. Really, the point that I was trying to make in that video is that is possible. And certainly I think it's a reasonable outlook to have. But there might be other ones we could think about. And the reason I did the comparison with gold is that it's a bit of a meme to call Bitcoin digital gold, but there are some similarities with it. The advantage of Bitcoin over something like the stock market is that Bitcoin is this asset that's not tied to just one geographical area. It's not tied to one government, to one country. It is an independent thing. It can be self-custodied. It's like gold in those characteristics. It's scarce by design, etc. And we did see in things like the bank failures that happened back in March. We also saw around the invasion of Ukraine, there was some impetus in the market to be buying Bitcoin in those really uncertain times. And so that's also times when things like gold tend to rally, when people are uncertain about broader financial system, want to get something that's safe, that can't just be taken away or isn't beholden to something like the stock market. And so basically what the thought experiment I was doing is, what if Bitcoin actually followed something more like gold in a recession versus something like the stock market? And the outlook would be extremely different. In the beginning, you would probably still expect it to crash because everything does. Gold does everything. All correlations go to 1 in those environments. People sell off at the beginning. But the difference is that something like gold tends to recover a lot more quickly than something like the stock market. And generally speaking, when you look at gold in recessions, it tends to end recessions either at the same level or actually higher than when it entered it. There are only a few examples where it actually ended a recession lower than where it started. Whereas with stocks, that's not universally the case. And certainly something like the dot-com bubble, stock market went down way further beyond when the recession ended versus where it had started the recession. And really, that was what I wanted to talk about with that, is that there's this consensus view of what will happen to Bitcoin. But there's this other one that I think is interesting to think about. And so if we would find ourselves in a recession, to keep in mind that it's not guaranteed to go the way that I think everyone would say it would be. And I think we could easily find ourselves in a scenario where Bitcoin crashes to some level and that all correlation go to one event. And then everyone on X is saying, all right, it's all over. It's going to go even lower. We're going to have less than $1,000 Bitcoin soon. That's all. You can just imagine what people would be saying in that kind of fearful environment. And then that could be the exact situation where Bitcoin bottoms and then is able to move up and catch a lot of people off guard. So I'm not saying that's at all guaranteed or even the most likely thing, but I think it's something that people discount more than maybe is reasonable given the possibility. So that was the main kind of thoughts there.
But I do believe that Bitcoin offers a lot of unique advantages, and there are certain narratives that do make sense to me with Bitcoin. So with Bitcoin, I do think it offers something unique though, and I think that's the kind of thing that is going to likely be resilient in a bear market, or in a recession rather. Not just a bear market, in a real recession. The US economy, the world economy is grinding down and things actually look bad. People are actually losing their jobs in mass, that kind of thing. I do think Bitcoin, I certainly don't think if I just had to put my money on it, I don't think we're going down to like the COVID levels again, or certainly not below it. It's possible, but I really don't believe that's happening. A lot of these altcoins, and that's not to say that I'm like anti altcoin, and we'll talk about this actually in a minute. Some altcoins that are doing some things and what I believe that altcoins need to do in order to have success. But a lot of these altcoins are just simply junk. That's the bottom line. And some of them maybe do have legitimate use cases.
Yeah, I think that makes sense. That's a good segue into that question with altcoins about what do they need to do to change that outlook that we just think that they're basically just speculation machines and don't actually have anything to back it up.
Yeah.
What do we think they need to be showing us? I think that they could survive a really harsh environment for speculation. So Jay, I know you have some thoughts on this. I'll let you go first and I'll chime in with some thoughts.
Yeah, and this kind of ties in with, I know Howard's asked us some things about Chainlink also, and it all comes down to they need to do something. Like that's the bottom line. And I don't mean do something in terms of sell us, oh wow, the and I'm not getting on Solana here. I'm just using it as an example. You could even say Ethereum. Wow, it's a great network for transacting in JPEGs of monkeys. Okay, at the end of the day, that's not the kind of thing that is going to drive forward that's not the future of economies of scale, is these networks that can sell us NFTs. And I do understand that there are many potential use cases for NFTs because there are interesting possibilities in the NFT space. But currently, what I think they need to do, that by and large, very few have actually done. And I do think we're starting to see the writings on the wall that, some of this is beginning to shift and start to move the other way. And that's, they need to have a functional use case that not just me, my 70-year-old grandma, no, God, I'm old, man. She's not 70. Never mind. She's 80. My 80-year-old grandma, she wants to use, and a 12-year-old girl, she wants to use. That's the kind of transition the space needs to take. And obviously that can come in a wide variety of possibilities. But what I'm getting at is that the altcoin market needs to be tapping into uses that people that aren't watching crypto for whatever the price is doing today are going to want to use, because it's going to have to be use cases that people want to use. We're talking about people that don't give a shit about the cryptocurrency market. There has to be use cases that they actually want to use for some particular reason. And there just simply are not many of those in existence at the moment.
Yeah, no, I think that's exactly my thoughts also. And I think it's interesting to think about how these types of technologies develop, because with the internet, for example, I know that one of the earliest things a lot of people invested in was infrastructure, because people didn't really know yet what was this useful for, like what were we actually going to do with this. But they're like, infrastructure makes sense, let's just dump our money there. And I think crypto has been in that phase, especially last cycle, where we saw these alt L1s, which are really infrastructure plays. It's, here's this base layer that you can build all this stuff on top of. We're all going to compete to see who can build the best base layer, who can have the highest transactions per second, who can have all this fancy stuff, without really worrying about, are we going to have actual useful stuff that generates a revenue or profit that makes things that can stand on their own and not just be propped up by venture capitalists. And I think you're right that we're moving out of that place. And in some ways, maybe this whole quantitative tightening, interest rates increasing, will be a blessing for the industry long term, because VC money has dried up largely. And there still is some, but it's way less than it was before. And so what it might mean is that for projects to actually be successful long term, they need to build a business model that's actually sustainable, that's actually profitable. They can't just operate on a loss permanently, which is really what a lot of those other ones did. And the incentives were really kind of misaligned from building those products, because you can make a ton of money by building a new alt L1, get huge VC investment, and then just basically just take all that money and run, and then not really worry about if anyone actually ends up using the product that you're developing. And so what I think would be really healthy for the space is if this forces them to think about, how do we actually build protocols or things that are actually going to be profitable, that'll actually sustain themselves without just all this external money coming in to prop it up, which has been what it's been so far. And so my hope is that with crypto, we're going to start moving out of this infrastructure place, where right now we have way more block space than there's demand for. If you just look at all the alt L1 blockchains, even the ones that have potential TPS of thousands per second, you look at their actual TPS right now, it's 2 transactions per second. We don't need anything that's doing that kind of, or we already have the technology to more than support the use cases that currently exist. What we really need is those use cases that are actually going to create demand for that block space. And then it'll make sense for us to keep on going. And obviously both things are going to work in tandem, but I really hope we move to that next step. So yeah, to reinforce some of the things you were mentioning there, Jay. So should we talk then a little bit about some things we think are interesting going on in the altcoin world, Jay? And I can let you
and
things that might be starting to get closer to that actual use case idea.
I just wanted to give an example. This is the Near protocol. And what we've actually seen is that Near has, sorry, I'm going to show something different first. So this is the Near protocol active addresses. And if you go all the way back to the beginning of the year, you see that's flat, it's stagnant, right? What you notice here, sometime over the last 30 to 60 days or so, Near has actually really jumped up in the number of active addresses. So you see it was pretty much flatlining, right? Almost at zero. So we're like 50K daily active addresses. So that's not almost at zero, but what we see is out of nowhere, the active addresses really picked up and it's sustained right at around 700K or so. And this is an example of one of these protocols. In this is one partnership that they made. One single partnership has, and we'll see how long this lasts. We'll see if this turns into anything, but a single partnership has put them up into a place where they're consistently at north of 700,000 daily transactions. And what they've done is they've partnered with this company called Cosmos AI, or they offer a AI service in Singapore. And what they do exactly doesn't really matter. The bottom line is they've formed a partnership with this Cosmos AI in Asia, and it's been a success so far. It's actually increased the value of the company. Just this partnership has increased the valuation of the company from 100 million up to 500 million. And it's basically a shopping app. It's the fact that they found this niche type of use case that people that aren't in the crypto space are actually interested in using. And so far, we see very few instances of that. But just this one example, this Near protocol, this fledgling Near protocol with 50,000 daily transactions, they've seen almost a 1,000% increase, over 1,000% increase in the number of daily transactions, just like that. So this is the kind of thing that the crypto space needs more of. It needs less VCs who are out there trying to just make a quick buck off of basically dumping their tokens onto the retail market. And it needs more people like this, or more partnerships like this, that are actually generating interest from outside of this existing pool of crypto investors.
Yeah, totally agree. And yeah, there's actually an example I wanted to just quickly throw up here also that I think also gets at the point that you're mentioning here. So let me just quickly pop that up. So this one's been going on since the beginning of the year, but this is on Hedera Hashgraph, is the L1. And this is just showing the current transactions per second on the network. And they're currently doing 500 TPS. It's been up at 1,000. It's been higher. And this has really all come from one use case. It's come from this Atma.io, which is an Avery Dennison product. And really, again, what doesn't matter all that much, but it's something that just basically tracks products throughout the entire, from assembly through distribution. So basically, what are all the materials going into it? It just basically establishes where things come from. So that's not coming from places that maybe was produced unethically or with maybe unsustainable materials or things like that. But it is one of those examples where it was a partnership that happened, and it went from Hedera Hashgraph having 5 TPS now up to sustainably hundreds, or if not thousands of TPS every single day that this has been operating. And so I think that just is another example of where these things, even relatively small use cases like this, can radically change the utility or the usage of these networks. Now, obviously, you have to look and see how long are these things going to stick and continue, but it shows how beneficial they can be for a network. Now, one I know that a lot of our viewers are probably going to be interested in is Chainlink and what's going on there.
Before you move on from that, I just want to say somewhere out there, a VeChain investor is crying right now, seeing
Right.
HBAR being used for a supply chain.
Yeah, exactly. Yeah, but this is one I know that they've been working on for a while to get it going, and so it was one that was looked at for a while. But yes, I think CCIP is another interesting one. So maybe I'll just quickly give my thoughts, and Jake, you can give your thoughts on it as well. I think with CIP, the potential for it is quite large. So if you're not familiar, it's a cross-chain interoperability protocol. And basically what it promises to do is to let people connect any private and or public blockchains together. So private, public, etc. And they're really targeting banks and things like Swift, for example, being the messaging system that's used internationally between banks. And what a lot of people will say is that's trillions of dollars in assets. Swift handles millions and millions of transactions every single day, or at least it facilitates those through its messaging system. And so the idea would be that even if a fraction of that starts using CCIP to connect different, even if it's just private blockchains together, that because fees are paid in Link, that is a huge potential boost. Now, the caveat that I currently have with CCIP is that I don't doubt the potential. I think that's absolutely there. I just think that with these types of things, they tend to move a lot more slowly than a lot of people think. And I think another mistake that people often make with altcoins is thinking that the second that one of these use cases starts, or that there's potential, like with CCIP, that means that the asset itself has to start moving up in price sustainably. That's just not the case. We're at a point right now where speculation is basically dead. People aren't speculating. So narratives like that are only going to have a minimal impact on price because no one is coming in here. Very few people are just going to suddenly jump into Link now that this is happening, because few people are paying attention who are already in Link and are already buying as much as they want to buy. And so what this might do is in the next bull market, give narrative fuel to help that speculation go further. But then to ultimately see that demand for Link through CCIP materialize, I think could still be years from now for that to actually get built into these systems. Because again, banks are not, they're conservative groups. They don't want to just go into something they're not sure of. It takes them time. It takes a lot of money to build these systems. They're going to want to be sure about it. And so I think it could take quite a while for this to actually realize in that demand, that particular aspect. So for that fundamental to actually translate into monetary demand for Link, I think could take us a while. And so I think it's more of a narrative that if the market turns more bullish, could really act nicely for Link. But I think that CIP in and of itself is going to pull Link up in the next year. I think it's probably a little bit optimistic. That's my view. Jay, I don't know if you have, curious to hear your thoughts.
Like Mark said, this stuff always takes longer. It's the Link video that I made, the Link video that I made, the one that probably I owe 75% of my total YouTube channel subscribers to. In that video, I said that when staking comes out, I think that the short-term impact of staking is being vastly overstated. And probably the longer term impact of staking is probably being understated, because people believe that just because something happens, that it's going to just send the price skyrocketing. And we saw a modest boost in the price, but it was nothing to write home about. And that's because this type of information is already priced in. Whatever change in price that you see when staking came out was probably just retail market. Some people like, oh, staking's here, I'm going to buy some Link. And then it quickly normalized. And it's why we've seen the price go between $10 or $9 and $6 since going on a year now. It's actually incredible. And so, like Mark is saying, even if CCIP does do all of the amazing things that it's supposed to do, it's going to require integration, and that takes a long time. And B, it's going to, a lot of the other aspects of Chainlink are going to simply require, if you look beyond CIP alone, it's going to require that the crypto space continues to evolve and it continues to grow, because if no one needs the data services from Link, because no one's using crypto, Chainlink's not going to just go running. And again, I don't know what the impact of CCIP partnering with Swift, for instance. I don't know exactly what that will lead to. For Chainlink to continue to grow, it's going to need the crypto space in general to continue to grow. So if no use cases are catching on, or no one's utilizing these data services for any reason, then Chainlink won't grow. But I think we're all here because we do believe that the space will likely continue to grow. Short term, I'm neutral on Chainlink. I think it's probably going to continue going sideways. Eventually, if the market doesn't pick up, sure, it probably is going to go down to some of the lower support levels. I don't know what your thoughts are, Mark, but I don't see anything that's telling me that Chainlink's going to $50, or anything in the crypto market for that matter, is just going on a rampage in the next 3 to 6 months, or even the next year for that matter. I think we have quite a while ahead of us. And I think a lot of people need to hunker down and prepare for a longer time horizon than they're expecting.
Yeah, I would agree with that. I think we're getting closer and closer to the point where it might be reasonable to expect some altcoins to start bottoming, but a lot of that is going to be dependent on what happens with broader markets. Because really, like last cycle, for example, I had written an article back when we first launched the site where I did analysis looking at last cycle of when Bitcoin started its bull market, how long did it take for altcoins on average to bottom before they could start moving up themselves? And it would be basically somewhere around right now relative to when, if assuming that the FTX collapse was the bottom for Bitcoin, assuming we're in a new bull market, it'd be somewhere around now if we just took that cycle and transposed it over this one. And obviously, I think that's being optimistic. And then, of course, with all those altcoins, even though they technically bottomed after that time, it still took them quite a while before they actually did anything too meaningful after that. Technically bottomed, but it's not like they did anything particularly exciting for a while. So I think I agree with you, Jay, that altcoins are not something where I'm expecting a lot of upside anytime particularly soon. But I do think eventually it could happen. The one caveat, though, and this is something we've talked about before, I've certainly made videos talking about this, is keep an eye on what the circulating supply is for these altcoins now relative to what it was when they put in their all-time high in the past. The thing about Link that's important to remember is that Link's circulating supply is only about half of its maximum supply right now.
Yeah.
It's only a little bit above that. And actually, when it put in its all-time high, it was notably lower than it is right now. I think it was somewhere around, or for a lot of that bull market that we saw with Link last cycle, was at about 300 million Link. And then now we're up at 500 million, something like that. And then there's still basically double that to be released at some point in the future. And my understanding with Link is they're not totally transparent about how they're doing it or when that's going to happen. So we really just have no idea. And we're just going to have to wait and see.
They have in the past given, okay, we're going to do it at this time, but then at other times they haven't.
And they don't give us like projections. Like some protocols have it. Here's the exact roadmap that we'll follow. And here's when the last unlock will be. Link's a little bit more free floating with it. And the reason why I bring this up is that if you're thinking about the last all-time high as being your reference point, just remember that's probably going to be more difficult for that asset to get the same price next time as it was before because there's more supply in existence. And that almost means just by the laws of supply and demand, you'll need more demand to get to that same price than last time because you're having to offset this massively raised amount of supply that exists. Now, obviously, it's more complicated than that because really what you care about is what is the available supply that people are actually willing to sell, which is not going to be the entire supply. They're going to be some Link holders who just never want to sell ever, and they're not going to be in that equation. But still, just by necessity, there's going to be more that people are willing to sell when the circulating supply is larger than when it was smaller. And that's not just for Link. That's basically every alt L1, basically every altcoin that's out there. Unless it's hit its max supply, this is something that you're going to have to be worried about. And so that's where I think a lot of people anchor themselves on the previous all-time high. I think there's some caution is warranted there that it might make it there, it might surpass it. I'm not saying that Link can't go off to hundreds of dollars per Link. I'm just saying that it's going to be more difficult for it to do it next time than before. And so you'd have to think that it's reasonable to think that's going to happen for that to happen. And certainly something like CCIP and more could give it the tailwinds to be able to do that easily. But it's just something to keep in mind that we're not in the same environment just in the protocol itself that we were back then.
Yeah. And with regards to that, like a case could be made for something like Bitcoin. Oh, we're near the max supply. So maybe over time it was almost keeping up with inflation from our current, viewing that from our current perspective where we're north of 19 million coins. But Link, like Mark said, is not, inflation's not going to keep up with the expansion of Link because we're only halfway there with Link. Of the total of 1 billion coins, we're just north of the halfway point. If they keep dumping onto the market, that's going to, let's just see where exactly we're at right now. Link supply, we're at 556 million. So they've recently, actually, in September, just a week ago, it says they dumped some more onto the market. I don't know if that's accurate or not, but it's saying here that on September 15th, they put another 20 million or so onto the market. This is the kind of thing you have to, I think it's a really good point that they're diluting the pot for you a bit.
Yeah, one thing I did just want to mention with that's really fascinating with Link is that if you actually look at Link's market cap and not its price, then the range that it's been in for this over a year now is actually almost perfect in where it tops and where it bottoms. But if you look at price, it's actually a
Yeah.
slight downtrend. And the reason for that, of course, is that they've been releasing more Link over that time. And so
Yeah.
price will slowly bleed, even though market cap's actually going flat that entire time, which is just a fascinating thing. And there's other altcoins that show that as well, where you look at the price and it's absolutely dismal. It's actually setting in new all-time lows. Then you look at market cap and it's not anywhere close to all-time lows. And the reason is because they've dumped so much supply into the market that now at a lower price, you actually have a higher market cap because you've increased the total supply.
Yeah. One other thing, and this is not something I think our generation of humans necessarily has to worry about, but there is an odd dynamic with Link where the more expensive a Link becomes or the more scarce it becomes, the more incentive there is for data service requesters to seek competitors out. Because if to request a single data feed, it's going to cost me $1 million. And obviously that's a wild exaggeration, but yeah, it could almost, there's this dynamic where it could be a victim of its own success almost. Not that I think that's actually something any of us need to worry about, but
Right.
it's just an interesting point of note.
Yeah, no, it is. One thing I'll just say there is that is actually one thing about the way that Hedera Hashgraph set up their system that's interesting relative to a lot of other ones, is that they don't price their fees in their native token HBAR. They actually price it in dollars, and then it's just however much of their native token equals that dollar amount, or like cent, like thousands of
Right.
cent or whatever. That's what you pay. And so it could just be that a very easy solution for a lot of these, like if Link ever got to that place, that they could just do a similar model where they're saying, instead of valuing everything in Link, we're just going to say that it's some amount of dollars to do this thing, this action, and then we're just going to do it through Link. So there's still a demand for Link. It's just that it's not going to be the case that you can get priced out because the fee is suddenly like thousands of dollars for one request.
The big problem with Link that a lot of people don't anticipate is the fact that all Twitter users that are into Link only buy Link and they never sell it, and they only plan to ever buy it and continue buying it. So eventually the supply is going to be completely owned by various Link Marines, and
Fully
then the whole
illiquid.
system's just going to implode.
Yeah. That's I guess you could make the same argument with Bitcoin maxis, that as that illiquid supply keeps going up, then yeah.
So I just wanted to, not that we need to like really go into this, but I think you're spot on here. For crypto to make it, people have to be using it that don't even know what they're using. They're just using it because they know it has something, it has some good or service associated with it that they want. And until that point, it's going to remain this kind of fringe outlet for people like us. It's obviously growing. The question is it growing in the right directions, or is it just growing amongst the speculative investors who have convinced themselves that they're big time crypto enthusiasts, but really they're just trying to win Lambo?
Yeah, exactly. Yeah. And I think another aspect of that also is it does seem like a lot of those really promising use cases that we're talking about are more on the enterprise adoption side. I think actually the near example is more retail focused. So that's a bit different
Right.
with payments. But like CCIP and like what Hedera was doing, a lot of that is getting companies to adopt it. And that does fit that idea. Is also, it would make sense if companies are doing this, then a lot of people won't even know the company is using crypto rails on the back end to
Right.
achieve what they're doing, but they will, and they're going to do it because it's more efficient, faster finality, all that kind of stuff. There are a lot of advantages. But then I also agree that I think for crypto to make the next step, you'd also really like to see those retail uses where people don't even know what they're doing, that they're using crypto necessarily, but it just makes the experience so much better that they actually want to use it instead of the centralized alternatives.
Yeah, I think you're right about that. I'm downplaying the enterprise use case, and you're right. There's probably, I think we probably see adoption on a large scale come from enterprise use case before we see the general public individual kind of adopting crypto. This thing about the Link Bitcoin chart, did you want to look at that, Mark? Or yes, just a quick thought I have on this. I think the bottom line is people want to know, is Bitcoin going to, what do you have here? Link
divided by Bitcoin.
Okay.
Did you want Bitcoin divided by Link?
No, it doesn't matter. I have it on my computer as Bitcoin Link, but it's the same
Okay.
thing, just reverse. Back in this prior cycle, Link, we saw go on this insane rally where it went from crashed into the beginnings of the bear market, that 2017 crash, and then we just saw it go parabolic from essentially what, mid 2018 was it, and all the way
Yeah. I
through
do a
2020
measurement of what percent. It was like 11.8 thousand% rally over.
against Bitcoin. Yeah,
Yeah,
not 11,000%, 11,000%
right.
against Bitcoin over that time, which is crazy. And this is simply because of the fact that it was a new infrastructure play that a perfect storm. DeFi was starting to catch on at the time. Link filled that need in the DeFi space, and people saw its potential use. But now everyone, the cat's out of the bag, so to speak. And I don't think I don't have a whole lot to say about it. I just don't think that's going to happen again, acutely anyway. Now, over time, I do expect that Link will outperform Bitcoin. But in the short term, I'm anticipating sideways to holding the current trend. Simply, if for nothing else, than the fact that we're in a bear market. Everyone already knows about Chainlink. There's no massive need for acquiring tons of Link right now. And a lot of these companies that do need Link, you have to remember they're making business decisions, right? They are going to buy Link on a per need basis. Right now, no one is requesting, and when I say no one, we're talking in relative terms here, but no one's requesting data services from Link because, simply put, not a lot of people are using crypto right now. So I think that this trend is going to continue. And then once things pick up, I think you're going to see Link start to take off again.
Yeah, I think that makes sense. And the one thing I would add also here that I think is quite different now than it was back through here is, as you mentioned, Jay, DeFi was a huge driving narrative for Link throughout this point because it was a key infrastructure play for DeFi, and DeFi was one of the things that really led into the last bull market. But right now we're in a very different situation. Like the CFTC recently put out a lawsuit against a number of different DeFi protocols, basically suing them, saying that they broke various laws and regulations. I know the SEC seems like they want to go after DeFi also. We're in a place where DeFi doesn't seem like it's in a position to go on any crazy runs right now. DeFi seems to be very much under attack. And until we get regulatory clarity about what is allowed in that space, certainly from the US side, I don't think you're going to be seeing that do all that well, at least in the near future. And so that's not going to be a narrative helping push Link up like it did last time. Now, you might argue CCIP gives a different narrative for it to run, and that's certainly possible. But I think that's really more just something that if the broader market turns more bullish, it could ride that. But if future cycles are anything like previous cycles, you'd still likely expect Bitcoin to be one of the leading assets into that next cycle, then Link either coinciding or following it up afterwards. And so when you're looking at the Link Bitcoin valuation, I think it is possible that it largely goes sideways. It really depends what Bitcoin does. If Bitcoin gets really weak and Link keeps going sideways, then obviously you're going to see this go up. If Bitcoin looks strong and Link keeps going sideways, you're going to see it go down. It's really not that determinant of what Link's doing. It's really everything that Bitcoin's doing that's going to determine how this chart plays out, in my opinion, assuming that Link doesn't break out. And I think Link probably won't break out until, at least to the upside, until we get to a different market sentiment right now where we're not quite so uncertain, if not bearish. So those are some of my thoughts on this particular chart. And that's not me saying that I'm long-term bearish on Link by any means. It's just that in the present moment, I don't see, as Jay was saying, I don't see any reason why we have to go on some crazy run, especially against Bitcoin.
Yeah, I think that's probably everything there is to say about that.
Yeah.
The last thing that I think we've covered quite a few things. We'll see you guys next time then.
Take care, everyone.
See you.